Hey traders, welcome back to this video. In this video, I want to share with you the correct way to trade supply and demand zones. If you've been trading supply and demand zones for a while, you might think that you already know that how you should trade them correctly. But trust me, at the end of this video, you will have learned something new that you might not have considered earlier. So without any further ado, let's get started. Now, as a supply and demand trader, we know that supply and demand zones represent the institutional activities. For example, here we can see the formation of this drop, base, and drop supply zone in this form here. So at this zone, in this area around this base candle, the institutions are placing their huge sell orders. So that's why after this supply zone, we are anticipating the market to go in the downward direction, in the bearish direction. Now the thing to wonder is at the close of this bearish candle here, the supply and demand zone is complete. For example, it will be somewhere around here. So now at the close of this candle, the supply pattern will be complete. Now, should you open a trade right away, or should you place a buy sell limit order at the low of this supply zone? Now let's see how that goes. So if you open a sell limit right away as soon as the zone forms, then you are not actually trading the essence of a supply zone, because if you remember, supply zone is around the base candle, around the high and low of this base region. So if you open the market order as soon as the supply zone is formed, you are not taking advantage of the supply zone, and this might go against your trade. So what you have to do is you have to wait for the market to bounce back in this region here. And now, since there is a lot of supply in this region, in this supply zone, then after that, since we will have placed a sell limit order at the low of this supply zone as soon as this zone forms here, so when the market goes here, our orders will also get picked, and then market will move in the downward direction. So we'll be riding along this downward wave with the institutions, because if we trade here, institutions might give false breakouts to hit your stop losses as well. So this is how you should trade, and this is how the true essence of supply or demand zones work. Similarly, if we look at this demand zone, the demand zone will be formed as soon as this candle, this bullish candle, is closed. Now again, just like supply zone, you should not open a market order right away at the close of this candle, but you should wait for the market to come back to this demand zone to get the demand, and then after taking the demand, our orders, our buy orders, will get picked, and then market will move in the bullish direction. Now let's go ahead and take a look at an example to understand this better. So let's go ahead to the chart, and here let me just go ahead and apply our supply and demand zones indicator. So once we apply the indicator will show us the formation of supply and demand zones on the chart. Now here we can see that at this supply zone, we can see this supply zone gets complete. The pattern of this drop, base drop supply zone gets completed at the close of this candle. Now, should you have opened the trade at the close of this candle? No, because that would not be the right way to trade a supply zone. The actual supply is lying around here in this base region. So as you can see here, right after the formation of the supply zone, market goes back to this region and then moves in the bearish direction. So at the close of this candle, what we should do is we should place a sell limit order at the low of the supply zone, so that market, whenever it comes back into this region, will pick our orders as well, and we'll ride along the institutional wave, and we'll see the market going in the downward direction here. As we can see, there is this huge downward momentum in the market, and this allows us to take higher risk to our ratios, because if we had opened our trade here, our risk to our ratio would have decreased. But by trading the supply demand in true essence, we are increasing our risk to our ratio. Also, we are sure that after getting the supply from this region, market will move in the downward direction. And similarly, if we go ahead and look at this, we can see that again there is the formation of this drop, base, and rally demand zone. Now at this demand zone, as you can see, you should not have opened a buy trade at the close of this candle here, because if you had done that, then the market, as you can see, goes downward again. So either your stop loss would have been hit, or if you had put your stop loss here, then your risk to our ratio would be very low. But if we trade the supply, if we trade this demand zone according to the supply demand trading strategy, then you can see after the formation of the demand zone, the market comes back to this region to get this demand, and then we can see the formation of this bullish momentum in the market in the upward direction. So this is how you trade the supply and demand zones correctly on the chart. If you are interested in getting access to this indicator, please go ahead and check the link in the description. I hope you liked this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video. Thank you.